Let's jump right into this explainer and decode PayPal's Q2 2026 earnings report. Whether you're holding their stock or just splitting a tab on Venmo, you know PayPal's been making waves lately with a huge strategic pivot. Today, we're cutting through the dense corporate jargon to see what the actual numbers say about the health and trajectory of this massive financial ecosystem.
Here's our agenda for today: the transformation plan, revenue and payment volumes, margins and user activity, cash flow and buybacks, and finally, the 2026 outlook.
Section 1. The transformation plan, setting the stage.
The whole report really revolves around one massive question. Is PayPal's transformation actually working? We all know new fintech competitors are popping up literally every single day, so PayPal had to shift its strategy to defend its turf and find new avenues for profitable growth. PayPal's CEO, Enrique Lores, is incredibly confident here. He's firmly stating that their turnaround is actively happening right now. He emphasized that they're moving with urgency, that branded checkout has stabilized, and that they're building real momentum with platforms like Venmo and Braintree. He's absolutely setting a confident tone, so let's see if the balance sheets back that up.
Moving to Section 2. Revenue and payment volumes, looking at the macro successes.
Before we get into the weeds, we have to talk about the sheer scale of the money flowing through PayPal's pipes globally. We're talking about a massive 10% year-over-year jump in total payment volume. It climbed from $443.5 billion in Q2 2025 to a staggering $486.4 billion in Q2 2026. Even when you adjust for currency fluctuations, you're still looking at a super healthy 9% growth rate.
And here's the crucial part: that payment volume momentum directly translated to top-line growth. Net revenues bumped up 5% to hit $8.7 billion for the quarter. To give you some context, the vast majority of that, over $7.8 billion, came directly from transaction revenues, with other value-added services driving the rest. The top of the funnel is undoubtedly expanding.
Behind that iconic logo is a sprawling network that processed 6.8 billion individual payment transactions in just 3 months. To put that in perspective, that's nearly one transaction for every single person on Earth. It's an 8% increase year over year, which really proves their massive scale isn't going anywhere. Even if you strip out unbranded card processing, those transactions still went up by a solid 7%. They are deeply, deeply embedded in the global digital economy.
Which brings us to Section 3, Margins and User Activity, the engine room.
Now, this is where we separate vanity metrics from reality. Management uses a non-GAAP metric called transaction margin dollars excluding interest. Why? Well, it strips out unpredictable global interest rates. Because the interest earned on customer balances is largely tied to macroeconomic rate movements that are totally outside PayPal's control, this clarified metric isolates the actual core economic value being generated by people actively using their platform.
Using that exact metric, we see a really healthy 3% growth in transaction margin dollars, reaching $3.6 billion. This is huge because it proves the core payment engine is generating more underlying value all on its own. It means they aren't just passively riding a wave of high global interest rates, their actual transaction ecosystem is becoming far more profitable.
Now, this dynamic is incredibly interesting. Total active accounts actually dipped slightly, down 0.2 million sequentially, landing at 439 million. But the remaining users, they're highly engaged. Transactions per account on a trailing 12-month basis increased 3% to a flat 60.0. This is a classic quality over quantity shift. They are clearly focusing less on just acquiring any and all users and doubling down on driving deeper engagement with high-value accounts.
Let's look at Section 4, Cash Flow and Buybacks, Funding the Pivot.
$1.8 billion. That massive figure is PayPal's adjusted free cash flow for the quarter, giving them a very serious war chest to execute their strategic roadmap. They generated $2.0 billion in operating cash flow, which nets out to that $1.8 billion in adjusted free cash flow. Basically, they're generating the cash they need to fund their own turnaround internally, rather than having to go out and borrow it.
So how exactly are they deploying all that cash? Well, they're heavily buying back their own stock and issuing cash dividends to keep investor confidence high during this turnaround. Just in this quarter alone, they returned $1.5 billion to stockholders by buying back roughly 33 million shares. And over the trailing 12 months, they've returned a staggering $6.0 billion through share repurchases. Toss in a 14-cent per share cash dividend, and it's crystal clear they are laser-focused on capital return. Plus, they still have over $15.3 billion in cash equivalents, and investments sitting on the balance sheet as of June 30th.
PayPal has the immense liquidity required to aggressively defend its current market share while boldly investing in new financial services. They have the rock-solid financial bedrock necessary to absorb any shocks and fund their future.
Finally, let's dive into Section 5, the 2026 outlook, the horizon.
The big takeaway here is that PayPal is officially raising its full-year non-GAAP earnings per share guidance following a really strong quarter of execution. They are now projecting approximately $5.38 for the full-year 2026 non-GAAP EPS, which is a solid bump from their previous estimates. While GAAP metrics show some slight declines due to the strategic investments they're making, this raised non-GAAP guidance signals serious internal confidence from leadership about where their core operations are heading.
So we have this fascinating friction between slightly fewer users but much higher engagement, a staggering $486 billion flowing through the platform, and raised profit outlooks. I'll leave you to ponder this. Is PayPal's transformation narrative finally becoming an undeniable reality? The numbers are absolutely pointing to a leaner, more engaged ecosystem generating serious cash. But the digital payment space takes no prisoners. Keep these metrics top of mind as we watch PayPal navigate the rest of 2026. Thanks for joining me for this explainer.